Hey everyone, how's it going? Welcome back to today's video on risk management, specifically focus on how to set a take profit for your trades. Many traders often have different strategies and different methods on a take profit or how to set a take profit. But let's take a look at my approach or my kind of trading style on this. I think this is one of the most important issue that new traders or beginning traders often don't understand is to set a take profit for your entry positions to secure profit as long as that fits your plan. Uh, in my opinion, there's no right or wrong way to set a take profit. It's what suits you as a trader or suits your plan and your strategy, right? Because it should align up with your trading style as well. So let's take a look at a few examples of how I would set a take profit based on kind of price action style trading and how to effectively set them so that you will secure or you will obtain good enough kind of profit for your risk reward. So you understand that some traders may take profit earlier, some trader may take profit later. It's all about how your plan actually works because you understand that there in trading there is what we call a double-edged sword, meaning that if you take profit earlier time, let's say you take profit earlier time, obviously your profit is less, but you avoid the market intentionally kind of pull back and then eating up your profit. Whereas if you're looking to hold a trade, if you're looking to take a trade, hold it for long term, understand that sometimes price may reverse and you might lose back all initial profit, but you need to let the trade run. So it's a double-edged sword because whatever you do, there's always a potential negative side of things. But let's take a look at how I would set a take profit based on a few scenarios. Uh, Understand that take profit and stop loss ties in very closely. We understand that risk reward management. We understand risk management in general. For me personally, I'm always going to look for a 3-to-1 risk reward, meaning I'm going to risk 1% of my account to get at least 3-to-1 or 3% or 3-to-1 kind of profit. So meaning that every trade I took, every take profit I'm looking for is always going to be at least 3-to-1 as well. So let's take a look at a few examples here. Euro Kiwi. So Euro Kiwi, let me explain a few scenarios that I usually will take profit. There are two major scenarios that I would look to take profit on. It's either going to be the beginning of the correction. So if you look at this correction here, it's the beginning of this correction. That would be the first potential target I always look for. And the next one would be the bottom of the price, the next recent low, the swing low kind of area where I will look to take profit on. So it's always good to have a few, what I call take profit one and take profit two, because you can monitor the price to see how they get there. So in this case, in this example, price first reached to this bottom here and then eventually hit the previous low here before bouncing back. So two scenarios you can take profit. First, beginning of this previous correction, right? Beginning of the correction that the price breaks out, or the next swing low, kind of a double bottom area the price may react to. I think those are the two main kind of take profit area that I will always look for when I enter a trade. And it doesn't matter if I'm looking for long or short. If I'm looking for short, then obviously it's the bottom. If I'm looking for long, it's the top. So let's look at a few examples here. Dollar Singapore dollar here. In this example here with the reversal structure here, this is a reversal correction. And what I'm really looking for is just the beginning of this correction as a first initial target, because I understand that we still are in a potential downtrend, and this reversal structure here may or may not be the reversal to push the dollar up at this given point. So that's why my first target will always be the beginning of the correction. And to see exactly what price does is it will hit that top, and then if there's no continuation correction, if there's no further bullish price action, we then pretty much see price decline and then continue downwards like so. So understand that why we said take profit is because we don't want to give back the profit that we potentially earned back to the market. And if there is no continuation, if there's no confirmation for further upside, it's better to set a take profit. So let's look at S&P 500 here in this example. When price was only in this area, there was a short position I was talking about. And again, beginning of the correction is kind of what I'm looking for as a potential take profit. So understanding that you see how these two examples we just give you that price barely touched the bottom here. This is exactly where I'm looking for as a take profit, and then eventually reverse up. And that's the importance of why we set take profit, because we're trying to avoid something like this. And a lot of time what happens for trader is when they hit a desire to take profit, usually the greed aspect comes in. They want to look for holding the trade longer and longer and longer, and except they start pulling back, and the ego gets best out of them. They think, well, I'm going to hold through a pullback because this thing can continue, but except it went all the way back to your initial entry, and you pretty much will earn 2 to 3% or more, and then you give back right back to the market, and that creates a huge emotional adrenaline. So, like I said, examples, always set a take profit when either at the beginning of the correctional structure that it's pushing out or the next swing low as a potential target. And let's give an example of what about a swing high area. So let's look at Cardano here. This is one of the example that I personally got in. Um, if we look closely here, um, understanding that if we look at the higher time frame, there is a potential swing top now. So instead of a swing low, that's a swing top. So if you look at this trade that I'm in right now, I'm only looking for a take profit to that top for about $1 or so to that profit here, and then look to exit this trade. Why? Because that's my management approach. I understand that we just had a massive bullish push to the upside. Price is still likely to continue, but I don't want to hold through a deeper pullback or deeper consolidation. We can just break the top here and then form a deeper correction, deeper bearish correction, and then pull back, and then I will lose a lot of profit in that sense. And I'm not looking to give back about 9 to 1 of profit back to the market. So understand that when you zoom out looking at the market, you understand that if there was no previous correction that broke out, you're looking at the next potential swing high area as a potential target. So this is that target I talk about, potential swing high area. And what you can do after, when the price, when this, let's say you're in this trade, it just hit your take profit, you can look to scale in back to the trade as long as it fits your plan. If the price continue to break out and form continuation correction here, then of course we can look to get back into this trade and continue, and that will be a new trade, new management approach, and new target. And in this sense, if I get back into the second trade, where my target would be, well, I will be looking at the all-time high now, because we're very close to that all-time high now. And if we break out, we form consolidation, we form continuation correction, then I will look for a trade here to enter, and then look for the all-time high as a potential target, and then we'll reevaluate to see if the price can break above that and then continue higher. Okay, so important of take profit, because you don't want to give back the profit back to the market, and when you do that, it creates a negative emotion in yourself, because what you end up always thinking back is, I just make all this profit, but why did I not secure profit at where I usually would? Is it greed get the best out of me? Am I hoping for price to continue bullish up, and then without thinking about the technical aspect, we just came out of the larger correction, we just had a big impulse up, is naturally for price to form something bigger, deeper here before the continuation. And that's something that you have to keep in mind when you're entering these trades, when you have a plan to enter a trade. Last one I want to touch base on is more of these entries. Why setting that low, the previous low or the swing low, is super effective. And let me give you two more examples here that I talk about back in there. When I entered this sell, this is one of the sell I actually took as well. I was looking this at the bottom here as a first potential target. You can see in this example here, I'm looking for a first target here, which is the beginning of this correction to the lows, and then the second target would be to the swing low of this. Potentially, there could be a double bottom. So guess what price does? If we look out here, it pretty much made this exactly a continuation correction I was waiting for. I looked for a short. Price, you can see bounce off of this beginning correction here. So that's the first initial take profit area, and then the second take profit is always going to be the swing low, the daily swing low or the higher time frame swing low. And you can see price pretty much hit the swing low before moving upside. And you pretty much, if you didn't take profit here, then you're giving back all this profit back to the market. Same idea here. We're looking at if the correction it already break out of the previous correction, selling a take profit to the low doesn't make sense, and that's why you look for the next swing low as a potential target. And this is what price did, right? Breaks out, form a continuation, pushes down, form another continuation, but instead of more continuation, we see a reversal push up. And again, that is why we set take profit, right? That is why we always understand that looking back at it, this is the previous swing low, and if we didn't set a take profit here, we're giving back the potential profit. Last one I want to touch base on is, what if the price breaks all-time high? How do you set a take profit when it breaks all-time high? In my opinion, this is what's happening with a lot of cryptos. Certainly is going to be on a lot of other potential pairs as well. So let's use Bitcoin as an example here. What if Bitcoin? How do you set a take profit when there is no previous swing high or previous correction to go because you're already at all-time high? Well, personally, I don't usually use those fib extension or fib retracement, whatever way people usually would calculate. What I do solely is just what I look at for price, right? We have an impulse up, we have a correction, we have another impulse. Is this going to form continuation? If it is, I'm going to hold the trade to continue. If it pushes up and then just a tiny pullback, but it's still forming a correction, I'm still going to hold the trade. It's only when I see a trend change, when I see a bullish push up and then sharp bearish push down, but instead of forming a more of a correction for further upside, what you actually get up is more of a bearish continuation now. Okay, this is something that I'm going to avoid and something where I'm going to move up my take profit or potentially exit the trade, because that is a sign from the market. We're no longer pushing up higher. We're having lower low, lower high, and we form bearish impulse down, bearish continuation correction. And that is why I'm going to exit the trade when I see something like that. When I see that the lower time frame is no longer bullish, or at least in a bullish continuation trend, it becomes a bearish kind of trade, a bearish reversal, and that's where I look to exit the trade and take my profit. Okay, everyone. So hope you guys understand what I'm doing here. Again, to remind, it's always going to be two possible take profit for me. It's always going to be first the beginning of the correction that the structure is in, so the beginning correction, and the next swing low as a potential target. So there's always going to be target one and target two. So I'm always going to set my target two as a hard take profit, and then target one, when I reach this area, I will set an alert and see how the price is reacting to it. If it starts forming reversal, sort of kind of stalling, correcting, and I will monitor the trade accordingly, looking to exit the trade for a little bit of profit. But if we impulsively break through, then I'll let the trade run, because I already set a take profit at the previous low, so that trade will automatically exit for me for a profit. Okay, everyone, so hope this video helps you guys on identifying how to set a take profit. Like I mentioned, this understand that you will never enter at the lowest point or and exit at the highest point. You're trying to secure some of it, right? And making sure that you have a plan before you get in, so you don't make emotional decision. Why taking profit is so hard for a lot of traders to grasp is because they don't have a plan before they do it. They're making decision based on rational. They're making decision based on emotion, and every other trade after that, it's all going to fall into that category where they don't follow a plan. Remember, there is no right or wrong as long as you do have a plan when you set a take profit. And whether the trade hits that outcome is a different story, but at least you manage it accordingly, you follow it to your plan, and you can modify your plan as long as the market condition changes. But you understand that you shouldn't make emotional decisions to exit the trade just based on your emotion. Okay, everyone. So thank you very much for tuning to this video, and I hope you guys learned something in this kind of educational video. And I will chat with you guys next time. All right. Thank you very much.